Welcome back to another case study in price. This was the day after yesterday's case study. So if you didn't watch yesterday's case study, I would recommend doing so. And this day was very clean. Like there was a lot that I was able to pull out of this. So I would recommend like you go into your chart and you actually like trying to do your annotations or just doing annotations. I have some blank charts before I actually write my annotations, but most of all, I'm a developing student, and these are just my interpretations on price. And big thanks to ICT. Let's get straight into it. So if we look at order flow, and like we talked about this yesterday, what is order flow overall? Order flow overall is bullish. So therefore, I'm gonna stand a more bullish bias. But I know that there's possible reasons for me to possibly engage in shorts. There's possible ways that I can engage, and I can still take a short position. As we can see here, we've had that indecisive candle, and then we had another like kind of indecisive candle. So that shows us that we're likely gonna see a potential sell, and that's exactly what ended up happening. If we go from back from yesterday, we knew that we were in bearish order flow, and that's what we continue to have today. As you can see today, we had a nice sell day, and we actually rebalanced this imbalance right here. Well, not rebalanced, but we repriced that imbalance right there. And here is the 1 hour chart on NASDAQ. As you see yesterday, we had that nice Judas profile yesterday, and then here we have a I wouldn't really classify this, but we have London high a day and then New York continuation straight into this pool of liquidity, also into this imbalance as well. And then if I'll point out as well later of where we actually ended up putting the low of the day at. And here right now is the Nasdaq is Nasdaq chart, and then here's YM chart. So right now, just pause before I do my annotations. And here are my annotations. We formed an SMT at these highs, and that was what was the catalyst for this move lower. As you can see right now, what is order flow? What is order flow right now? If we just look at Nasdaq, what is order flow right now? Order flow is bearish. We had that day yesterday. We end up taking liquidity in that fair value gap. We end up displacing lower. What are we respecting? We're respecting up close candles. Respecting up close candles. And here is the 1 hour chart, and I forgot to put a 1 hour. I forgot to pause for the 1 hour chart, but y'all get the deal. If you, like I don't know. So basically, this is a 1 hour inverse for value gap, and the reason why it is actually an inverse for value gap is because there's context around it. You know, this was I believe at 9 a.m. So 9 a.m. expansion, 10 a.m. expansion. So there is some context around it. We end up displacing through it. Look at the bodies. Look, is that a coincidence? Look at the bodies, and then look at this again. And I highlighted this because this highlights constant encroachment. And look at where we sold off at the SMT at a certain time of the day with this order block right here. We also have this order block that gets confirmed. Come back into here, boom, sell off where to this fair value gap here, and to take this liquidity. We initially dig into this fair value gap, and we come back down and then reprice lower. So this is that 1 hour chart again, which, sorry, I forgot. Basically, I want to point out this fair value gap as well. Look at the bodies on the 1 hour. Look at the bodies on the 1 hour. Just completely respecting this SIBI. The wicks are doing the damage. The bodies are telling us the story that we likely want to see lower prices. That's exactly what ends up happening. And this day as well was CPI. I want to point that out. We had CPI at 8:30, which I'm honestly surprised that CPI didn't do something bigger than this. Usually CPI, there's a big expansion in the market. At least the CPI that I've backtested, this CPI didn't really do too much. It really didn't. It looked like a normal candle, like a normal news event, but this was CPI. All right, and then here are my 15-minute annotations. As you can see right here, we have high resistance liquidity, high resistance liquidity, high resistance liquidity. This is CPI right here. That we end up having. And if we look at what order flow was up until CPI, we were in bearish order flow. We're respecting down close candles. We're blowing past. We're clearly bearish. We're creating bearish for value gaps. And we come back into this area right here. We have this inverse bearish for value gap aligned with this for value gap. We take liquidity right here, displace lower. And yeah, we're hunting that 1 hour for value gap. So like if you were, I didn't really annotate this because there was a lot within this day. Like this day was very nice and very clean. As you can see here, like this was some selling opportunity, but I'm not gonna place myself in front of CPI. I know that for sure. So I'm not even gonna go in there. I'm not really gonna backtest it. I'm just gonna more see like what happened in terms of liquidity purposes. So as we can see, we end up having displacement lower on CPI. yeah, and then we take we come into that 1 hour fair value gap, and then we end up having high resistance liquidity, high resistance liquidity, high resistance liquidity at market open. This candle right here denotes market open, and where is the high resistance liquidity? Where's the low resistance liquidity at market open? Right here we have high resistance, high resistance, high resistance. Where's the low resistance? The low resistance liquidity is at these highs right here, and that's exactly what we end up repricing to then have a sell off throughout the day. All right, and here is a 5-minute chart. These are all annotations from the 15-minute, but take. I believe I have annotations on this in the next slide. Oh yeah, I wanted to point out. Sorry, I'm kind of all over the place, but basically, what could have gave you extra conviction for this long is not only do we have an S&T with the Nasdaq and an S&T with ES at market open at a certain time of price, with all of this narrative surrounding that we have low resistance liquidity to the upside. Overall, we're bearish, but we can look to take a long here at market open, use that market volatility to reprice higher. We have SMT with YM, and not only do we have SMT with ES at a certain time of the day at market open with low resistance liquidity to the upside. This is like a classic Judas profile. And right here, this is the 1-minute chart of Nasdaq. Right here, we have the SMT, and I'm going to give you time if you want to have notations on this before I write mine. And here is the annotations that I have in here. Right here, we have a buy side liquidity pool, and then we have that 1 hour inverse fair value gap that we might want to reprice to. This is contour encroachment I have marked out of just this right here. And then this black line right here is a 1 hour order block. If you guys have seen from the 1 hour chart, we have this 1 hour order block that we come up and we reprice right there. And here is the 1 minute chart here. We end up coming back down. We end up market opens. What do? We take liquidity within that imbalance, form an SMT with 2 of the indices, and then we wait. We're just waiting. We're just seeing. Okay, we're not like, oh, I see low resistance liquidity up here, I'm just gonna long this, because no, that's not sustainable, you know. And then we're waiting for what in particular? A change in state delivery, an order block right here. We have change in state delivery right above this order block right here. Market structure shift as well. We come back down right to that order block right there. And look at down close candles. Down close candles are supporting price. Down close candles are supporting price. Down close candles are supporting price. And look at this order block right here. A big beefy down close candle right within here. That would be your propulsion block. Once that gets confirmed right here, you know that you're on the right side of order flow. And we come back down to this order block. The reason why I did this order block instead of this order block is because it's the lowest down close candle with the biggest body. Right here, this one goes a little bit lower than that one, so that's why I use this order block. Gets respected perfectly. And we also have a fair value gap attached to it. Makes it a little bit higher probability. We end up coming back higher. We also have a possible previous area of mitigation right here. Map that out. Boom. And look at order flow. If you were to enter, if you were to trade this, I would look to possibly take a trade off this order block, fair value gap, consequent quotient of that. The boom, another order block, and then higher prices are seen throughout this. And this is that 950 to 1010 macro. 950 to 1010 macro offers expansion. So after 1010, what if we've had expansion to the draw on liquidity, which was this 1 hour inversion? I'm anticipating to see a possible consolidation or some form of time distortion where we're not really moving. Moving in a certain direction for a certain reason. We're kind of just marking time throughout these candles. And that's what you end up seeing here. And then we can also use standard deviation projections. And this is a nice thing to use. I use from this fulcrum point to this fulcrum point. You could have possibly mapped it out here. I believe these are like equal highs, so it wouldn't really matter. -1 lines up pretty nicely with that order block. That would have been some high confluence trade here. And then notice this previous area of mitigation. Boom, gets respected along with that order block. And then I believe we also have, this is on the 15-minute time frame. If we were to map out the wick of this 15-minute, because we know that smart money is active within the wick, the algorithm is going to use wicks sometimes to have standard deviation projections. And if you map that out, look at exactly where -2 lines up with is that high right there. Is it a coincidence? I don't think so. And here is a 5-minute chart. I would I was able to pick out like some good parts about this. So if you want to see where the smart money reversal actually happened, I would highly recommend marking out in your own chart. And we're about to skip over. And here, right here, is where the smart money reversal happens. Notice there's a lot of things aligning here. We have constant encroachment of this 1 hour fair value gap. We have that 1 hour order block. Look at the bodies of the candles. We also have this fair value gap that price wanted to reprice to right here. This is a balanced price range. We don't really expect price to really dig up into here if we're bullish or if we're bearish. And if we are to dig up here, we should react immediately. And look at here, we have wicks and wicks to then decline lower. And I do want you to really think about this because there's something that was very algorithmic within this delivery. Right there. That's what it is. Constant encroachment of this wick. If you map that out, boom. That was the perfect high. This now becomes a wick that you can use or a wick that's of importance because it's overlapped with a fair value gap. You had originally you had sell side, then buy side that bought this wick all the way back up, and then you have sell side delivery. So in a sense, this is a balanced price range. So we don't really expect price to displace above this if we are bearish, and that's exactly where we end up putting the high at the smart money reversal at. And right here, I wanted to denote. Sorry, this was kind of a little bit off track, but I wanted to denote the Dow's delivery of this sell model. Right here, we have SMT at this highs. We then consolidate, whatever time distortion, whatever you want to call it, consolidate, then displace lower. As soon as we get displacement, we have a fair value gap at the high of that breaker. Right there, boom, perfectly. Within the macro, this was the 1250 to 1110 macro. So don't this is something else. That's just where my cursor was when I took the screenshot. So right there, right within that macro, perfectly. Then we come back down. What do we use? Fair value gap, right with that breaker, low, ooh, perfect delivery, right there. So the rest of these notations are going to be on NQ, but as you can see, YM offered beautiful delivery as well. All right, and here is the 15-minute chart that I'm going to mark my annotations with. If you don't pause. Right here, this is a 5-minute order block that I have marked out. And I do want to talk about this. You have that 15-minute change in state delivery right here. So right here within this candle, you have 15-minute change in state delivery. And oftentimes, I'm really looking for that. I'm looking for the 15-minute change in state delivery to really be active, to really be confident that we are going to reprice lower. Right here, 15-minute change in state delivery, exactly what ends up happening. And then right here, we have the order block we have an order block that digs into the previous order block. So what does that become? Propulsion block. And then we have, if you map out this wick, beautiful delivery right there. Notice how this wick is of importance when it's paired with the fair value gap. Right there, wick in line with that fair value gap. Boom, boom, boom. Look at those highs right there. Beautiful delivery. Right, also within this 15-minute fair value gap. And if we do look at what midnight opening price was, it's like in line with all this. So all of this is adding together to give you a high probability trade. All of it's happening. We know that the probabilities are so much shifted in our direction here that we're likely not going to see higher prices, to where if you were to trade this and say you didn't even enter in on any of these entries that I'm going to point out, if you're just in line with order flow and if you have confidence with what the draw and liquidity is, that's all you need. And then just have like a 1-to-1. And then just stay confident with that. And then over time, you're going to start seeing things that you weren't able to see before. And right here, we have a 5-minute chart. Smart money reversal. You have that order block right there, that change in state delivery. And I don't know why I don't really have it marked out here. And this is just before I mark out my annotations. So that makes sense. So yeah, right here, before I mark out my annotations, I would recommend you doing that. So this is the 5-minute chart here. Look at that 5-minute order block right here, perfectly. Look at the wicks here. Look at the wicks. Look at how much time we're spending within this area. We're giving smart money a chance to get active within this area. Then we end up repricing lower. Oh shoot, my bad. Repricing lower, we displace it, come back up into this fair value gap, and boom, if you map up that wick, that's that 15-minute wick that we end up coming back to. But on the 5-minute, it might be constant encroachment, I'm just eyeballing it. It looks like it is, but that 15-minute wick is constant crunch with that. Boom. Displacement lower. Pull back. Where to? We'll discuss that in a minute. Right back to where? Boom. So very nice market maker sell model. Here you have low risk entry, first stage, second stage distribution. Low risk entry, first stage, second stage. Boom, right there. Taking the draw on liquidity. And here's my other annotations I have on the 5-minute chart. As you can see here, I drew standard deviation from the first retracement leg, which I'll do either that or from the last manipulation leg. So since there isn't really a nice fulcrum point I can map out with this was kind of just an up move with like little like retracements within here. It was just a straight up move. I can't really map out standard deviation with that, so I'm gonna use this retracement leg, this first retracement leg, or possibly a 15-minute wick, which I didn't use because I liked this a little bit better right here. Boom. Where's that negative 1.5 line up with? That second stage of redistribution. Negative 2.2.5 is a possible reversal. We displace through that. We end up coming back up. And I believe this is a wick on the 5-minute. We come back up right into that area. And then boom. Negative 4 ends up putting a low and ends up implying terminus for this market maker sell model. So this is a very nice model. That nice mitigation block. Respected perfectly. Displacement lower. Alright, and here is the 1-minute chart of this model that I'm going to dive into. So if you don't have your annotations on this, I would recommend. Right here, we end up having that smart money reversal. We know what this is, that 5-minute order block. We end up having displacement lower. And look at this fair value gap right here. And notice how this doesn't happen at a specific time. Like, usually, we're trying to look at certain times of the day. Macros, that's what we want to engage with. None of this None of this happens within a macro. This is all just time distortion, I guess you could say. So we're not really doing anything of importance within this area. We're just marking time right here. We're just marking time until that macro hits. This macro hits at 10:50 to 11:10. This macro is just consolidation. So we expect after that for us to start the real move. What ends up happening, we end up coming right within that fair value gap right here, taking stops right here, reclaiming that fair value gap, displacement lower. What else do we reclaim? We reclaim this order block or this propulsion block. No, sorry, this is an order block. It's a regular order block right there. Big beefy bottle, big beefy candle right there. Boom, right there. Displacement lower. That right there. Order block, or even this right here. After that macro, boom, reclaiming that. We know that we likely have that smart money reversal. We have a 5-minute change of state delivery. We have 15-minute change of state delivery. We know that it's likely probable. And say, hey, you just get in here and you look for this low here. That's all you need. That's all you need. Displacement lower, and then we're going to go over this a little bit more. Here's that standard deviation mapped out, and right here. This is a 2-minute fair value gap high and 2-minute fair value gap low. And what I also want to keep in mind right here is that we have old buying right here. Old areas of accumulation will be used as new areas of selling on the right side of the curve. So right here you have your smart money reversal. This now is the right side of the curve here, and then this is the left side of the curve. All of these order blocks, we can map them out and we can use them. Right here I used the bodies of that, but I would use, you could use the wicks as well. We use the bodies right there, come back up, right with a 2-minute fair value gap, and then boom, we end up displacing lower. We reaccumulate here, then displacement lower. And also what I do want to point out here is that if we can swing grade this model, if we can swing grade this, we can get good projections right here, or we can get a good sense of what we're likely to do within this model. Right here, 50%, once we cross that 50%, we're just waiting. We want to see a stop hunt. Right here, what do we have? Stop hunt. Stop hunt right there, right within that breaker block, and then boom, then we continue. And then right here, your silver bullet is anticipated around 25%. I would classify this as a silver bullet, but this right here at 25% is a type of silver bullet. Right here, we're just zooming in, and we have that old area of accumulation. We come back up, constant approach of that perfectly. Oh, sorry, this is after that. We end up coming back into constant approach for that. At a certain time, at that 1250 macro to 110 macro, boom, right there, displacement lower. Kind of have order block right here that we end up respecting. down close candles or respecting price is just retracement right into that level, into that area. All right, and lastly, this is that last area of accumulation. This technically is your last silver bullet entry right here. We come up to that fair value gap, and then where do we stop? Where do we stop? Right at this low. Boom. That old area of accumulation now becomes a new area of distribution. Right to that, also aligned with this fair value gap. Boom. Straight to sell side. And a nice trade. I wouldn't look to engage with this, but it's just for back testing purposes. All right, right here. Now we have the 5-minute chart. And I'm going to bring out some important parts about this chart. So right here, we have this. This now becomes a balanced price range within these wicks. We have just taken sell side liquidity. So the fact that we just taken sell side liquidity, I'm just going to wait. I'm just going to see. I'm going to wait for 2 p.m. specifically because I know that that's possibly a time of the day in which we could have expansion. Right now, we don't know if we're likely going to head higher or if we're likely going to head lower. But if we zoom out to the 4-hour chart or the hourly or the higher time frames, you can well get it. You can get a better sense of direction. But right here, we're working the 5-minute chart. We've just taken liquidity. Our standard deviation projections have just mapped this out to this low. So what are we waiting for? We're waiting for the market to tip its hand. Right here, we have a balanced price range within these wicks. We have a sell side offered here, or sell side delivery, buy side delivery all the way up here. So this, in a sense, is balanced. We don't expect price to come back to even here. We've already mitigated this fair value gap. We've had an institutional order flow entry drill right there. So we're waiting. Come back up in this balanced price range. And then once we displace from that, boom, another institutional order flow entry drill. And then boom, another displacement move. And right here is what I want to highlight. We have your silver bullet hour. We have institutional order flow entry drill into a 5-minute fair value gap at a certain time of the day at 2 p.m. Isn't a coincidence, really. 2 p.m. right here, boom, fair value gap. This is trusted to be institutional overflow entry drill, again, because you have balanced price range. You have this wick right here that delivers within this fair value gap. The only reason why this wick is of importance is because of this fair value gap. Right here, we have that wick. We have sell side delivery within here, buy side delivery within here, and then sell side again. So now we can trust this to possibly be an institutional overflow entry drill because we have a balanced price range. The fact that we have a balanced price range makes this an institutional order flow entry drill. We come up with that, and then boom, displace lower, come back where? Order block right there, boom, speedy delivery right there to sell side. Or this actually is a 4-hour order block that I have written out in my chart that I'm gonna show you later on. We end up coming right down, boom, right to order block. That was pretty much the low, but there also is sell side targets along the way that you could have targeted that you can look at within your own charts. And now this is the 1-minute chart that I'm gonna annotate in a second. Right here, you have that silver bullet hour right here. We're waiting. You could possibly look to get engaged here, but me personally, I'm gonna wait a little bit. Notice how 1:30 p.m. you have like a little Judas at 1:30 p.m. respecting this down close candle. Then we get a fair value gap. We get displacement. Boom, right to that candle here. Maybe you want to wait. You want to wait because you don't know yet. This is that balanced price range that we are rejecting off of. Right here that's that balanced price range. So now this is on the 1-minute chart. So you have sell side delivered here within. Then you have buy side. Then you have sell side. You have this fair value gap. This wick is sensitive. That becomes a rejection block. Boom, order block right there. Now this right here. That's your propulsion block. Once that gets confirmed, we're off to the races. As you see, we come back right up within that. Immediate rebalance right there as well. Powerful delivery. And then we come back up. Breaker block right here. Aligned with this order block right here. These 3 up close candles. So this also is a breaker block. It also is an order block. Right here, we have these 3 meaty up close candles. I would refer to this instead of the breaker just because this breaker is kind of like a doji candle. So I like to be using order blocks and breaker blocks when they have big juicy meat to it. Sorry, that might sound a little weird, but yeah, when they have big up close candles right here, boom. What do we tap to? Right there, that area, there. Displace lower, boom, fair value gap. Now you probably waiting. We're just waiting. We're just gonna wait for silver bullet. We want to wait. So here we have order block gets respected perfectly. Remember, that's not 5-minute institutional order flow entry drill. Right there. boom, fair value gap. First fair value gap to get traded out, to get traded into within 2 p.m. If you want to be like systematic and mechanical with it, boom, that's your silver bullet right there. Then displacement lower, pull back, another fair value gap. If you didn't get active here, if you feel like you missed it, that's okay. You can. There's always probably going to be another chance to enter right there. Boom, and then price just ends up displacing lower and lower and lower into standard deviation projections. The last manipulation move, fulcrum point right here. -1 to 1.5 right here, where we have another area of distribution within that area, and then -2.5 right here is when we could possibly reverse. This is that 4-hour order block I was talking about. Again, a big juicy candle right here, a big meat on that bone right there. That opening price is going to be sensitive. That's exactly where we end up repricing to, creating a big wick here. And now this is opportunity. Again, this was a beautiful day. I would, if you were active here, if you got a trade out of this, I would just simply back off here. But here we have the end of the day macro. We just had a huge sell-off, we just had a big selling day. So therefore, we can anticipate maybe a possible wick on the daily candle. And that's exactly what this macro is. So here's the 5-minute chart. So if you want to have some annotations before I write mine, do so. Here are my 5-minute annotations. We have this order block that gets repriced too. And then this right here is also another 5-minute order block. This is that change in state delivery right here. Boom. Order block right there gets respected perfectly. Then we come back down right to this order block, boom, and then where do we reprice to? This order block right here in specific, that order block. So we're going from order block to order block, higher time frame 4-hour order block right here to that 5-minute order block. And here's that 1-minute chart in case you want to look at it. I didn't mark out that 5-minute order block, which I should have on this 1-minute chart. But basically, we have displacement higher right here, pullback, fair value gap right here. Also aligned with the inverse fair value gap. That's going to be a balanced price range. So we expect price to react to that. Boom. We get displacement, pull back right here. Boom. Order block respected perfectly. Then we come up to this imbalance here, this SIBI. Also to -0.5 standard deviation. If you want to look for just something small, something short, that could be something that you look for right there. Then we come back lower, back to that 5-minute imbalance or 5-minute breaker, and then this is that breaker 5-minute order block right there. Sorry, if we go back within the chart, here's that 5-minute order block that we reprice right to. Also, what is this? 5-minute fair value gap. So that fair value gap aligned with that order block could possibly see another run up into this order block. That's what we end up getting right here. Boom, fair value gap here up into that 5-minute order block. Also, this looks like we put a high right here. So this reclaimed fair value gap right there. Boom, that was that delivery right here. -1 standard deviation as well of this retracement leg ends up getting hit perfectly, or not perfectly, but pretty much in this area right here. So yeah, and also if we use swing grades as well within this model, where's your low risk entry happen? Right at that 25%. What are we looking at? 50%. And we're looking for a stop hunt. Right here, we come above 50%. Then we have a stop hunt right here, offering that low risk entry with that stop hunt. And then right here within that model, we end up having silver bullet. But this was just from here to here, because that's probably what I would be anticipating through this day. I wouldn't really be anticipating that 5-minute order block. So I would map out my swing grade from this low to just that fair value gap to what I would feel confident to be the draw on liquidity. But we do end up heading higher, and we end up coming back to that fair value gap in that order block. So there was a lot within this. Like, this delivery was very nice, and there was a lot you could have got out with that. So as we can see, this is just a blank 5-minute chart. But after we break it down, it becomes a lot more meaningful. It becomes a lot more clear. This is like some bummy annotations I threw on here. Sorry, I wasn't gonna like go back over and redraw in all of my annotations, but basically, we know that these certain types of things happen for a reason. It was very nice to see this pan out. Very, very beautiful. Pretty much, you have CPI right here, displacement lower. Then you have Judas swing up to a certain time, and then we have just pretty much sell off throughout the rest of the day. And then we're closing off that daily low boom, right there to that order block. So when every time you can have like three, I've said this in the last one, but anytime you can have like three possible high quality entries, like that is a good day. And the fact that this happened back to back days is very good to see. Is like this would have been a very good time to be trading. But yeah, that's all I have for this one. And until next one, I'll be back. And I appreciate you guys, and I'll see you guys in the next one.